Guys, there is a massive recession heading towards our economy, and yeah, this data that I'm going to present to you in today's video will only confirm that. But there's a very big but. This information is going to be so important because markets can stay irrational for a long period of time, and I will show you exactly when and where you will need to act on this data. But in today's video, guys, we are going to have a look at the federal funds interest rates, and we are not often looking that much at the macro scale right here, especially not macroeconomic in terms of interest rates and stuff like that. We mainly focus on Bitcoin, but I do think that this has really a huge effect on Bitcoin. I will show you exactly why. Same like the M2 supply, the money printer has also a big effect on Bitcoin, because the moment the M2 supply has been contracting, we are seeing Bitcoin coming down, basically, right? Which we have been talking about in the other video. But yeah, this is the funding rates, also very important though. This is the interest rates from the Federal Reserve, and basically the interest rates, they have the highest influence on how much interest there's basically being paid on loans. The interest rates is from bank to bank, but they also have, of course, a lot of influence on from bank to clients, stuff like that. So what we are seeing right here is that during 2022 we have seen a massive spike in the interest rates, and if you see these gray zones right here on this chart, those are basically recessions, and you can see that the previous time we had a big rise in the interest rates that eventually lead to a very small recession. But the previous time was actually the housing market crisis, guys, and we are right now at the same levels and then at the housing market crisis back in 2008, which was followed by a massive recession, multi-year long recession. And guys, I think this is coming now as well to the regular financial markets. A recession is coming our way. It will drag Bitcoin down. We are going to see a massive bear market, multi-year long bear market. I'm actually over the coming years, if you've been following this channel, I'm actually quite bearish on what is going to come. That doesn't mean that I'm not bullish in the shorter term time frame. I'm very, very bullish in the shorter term time frame. 16-year cycle. You guys know what I'm talking about. If you are following this channel, if you are new, make sure to subscribe, because this is something that we talk already about for quite some time. But here we can basically see the S&P 500 and the interest rates from the Federal Reserve down below in the red. And what we can see right here, and let me draw for you a nice vertical line, is that back in 2000, when we had that recession in 2008, the housing market collapsed, the fall of the Lehman Brothers, this was a big crash, guys. This was a very big crash, and it took years. It took really years to recover from that crash. So it is something, right, that the markets is crashing like this in such a small period of time. But it's even more something, it takes such a long time to recover. Imagine how that would look for Bitcoin, right? If we do see a massive multi-year long bear market and a multi-year long time frame for Bitcoin to slowly recover, what will that do with your portfolio? It will completely drain it, because money is going to be very hard to find in the economy. You would most likely touch your savings, which is your crypto, which is down in value, which means that you're screwed, right? And that's also what we are going to try and outsmart during this cycle. So, but I want to draw a vertical line right here. We can also do actually a horizontal line. Yeah, I have a lot of drawings right here, guys. Maybe we should ignore that a little bit. Maybe we should just get rid of the drawings, basically. But what we can see right here is we are trading at similar levels with the interest rates as what we did in 2007, right before the massive fall of the Lehman Brothers and that recession. But if you look at this, we can see that in July of 2006, and look at this, July, it's even right now the month that we are trading, also July. It's a funny coincidence, right? We actually came as high with the interest rates right here. But if we have a look at the price, and I will zoom in for you guys, if we have a look at the price right here, then you can see that we just still had from July 2006, we continued this uptrend until the 1st of October 2007. So that is kind of crazy, guys, because that means that we went longer than 1 year, continued in an uptrend before we saw that massive crash after the raise of the interest rates. So, and this is exactly what I'm talking about with the 16-year cycle. The 16-year cycle talks about a recession, which is confirmed right here with the interest rates. We almost all the time, also the previous time, guys, the interest rates were that high coming down. That was the dot-com bubble pop, the dot-com crash right here in the year 2000. And that is also the period that I actually align with Bitcoin right now, because it's an adoption of a new technology similar like the dot-com, which was the internet, and it looks very similar with these 4-year cycles and 16-year cycles in total. So that's why I think we are going to see something similar. This is not the only evidence I have. I have a lot of evidence for this. Evidence that I have for analysis and stuff doesn't mean that it's a certainty, right? That's also something I really want to point out right here, guys. That doesn't mean that it's a certainty that this is going to play out. It just shows us like that the conditions right now are looking pretty similar as conditions in the past where we have seen a massive recession, right? But that doesn't mean that we cannot still continue this uptrend in a shorter term time frame, maybe for 1 year, heck, maybe even longer. It's possible. But there will come a time that we are going to see that massive recession coming because of the rise of those interest rates. Basically, that's just how it works. Look, interest rates coming down. This generally, the longer the interest rates are down, the higher the buying pressure, right? And you can see it already right here. The buying pressure is insane when the interest rates are low. Here also, interest rates are low right here, buying pressure coming in. And that's also actually what happened in the past. This just basically shows how much money will there be flowing into the economy, or how much money will there be flowing out of the economy. And these interest rates, this increase in interest rates is definitely a big warning, is definitely a precursor of a big recession. But this is the big but that doesn't happen today. The average time for a recession to occur after the increase of interest rates and topping out at a certain time is roughly 10 months. Okay? So we can still, for the average time, go 10 months still in an uptrend before we are going to see that massive recession, right? But if you are not aware of it, and if you would follow the regular 4-year cycle on Bitcoin, then yeah, you might get left behind, because that might not be the path that Bitcoin is going to take. Because how Bitcoin is going to react whenever the stock market is going to see a massive recession. Well, if we have a look at the historical times that we have a recession, we actually have only one example, and that is this very tiny gray area, because the previous time, this was actually the moment that Bitcoin got born in 2008, because of that crisis, right? This crisis, this very small recession, Bitcoin had a massive drop. It had a massive drop during that period, right? So it was going hand in hand with the regular financial markets. And I think if you just look at the fundamentals of the markets, right? And we can simplify it. We can make it very simple. So there is a time where it is beneficial to take risks. And there is a time where it's not beneficial to take risks. But when is that time, right? When a lot of new money is flowing into the economy, so the circulating supply gets inflated, it is a benefit for the holder of the money to risk, to kind of gamble with that money, because when the majority is doing that, because of the incentive, because the circulating supply is being inflated, that means that the asset prices are going up. Right? But when money is not that liquid anymore, when money is scarce, when money is actually getting scarce, right? Because the interest rates go up, this is like when there is less money being pumped in the economy, that is the moment that people start to like, they keep their money, right? They don't want to take risks. And it's also not beneficial for them to take risks, because most people don't do it, which means the asset prices are not being pumped up. they are actually going down, because the value, and this sounds maybe crazy, but the value of money will go up. There are times that we are seeing inflation, but there are also times that we are seeing deflation. So guys, this is a very important chart, and I think it is way too much information to talk about all these cycles in one video with all this information. That's why I just make a separate video about this. But this is another chart basically showing us that the road ahead is not that colorful, it's not all rainbows, and I definitely don't think it's going to be. But that doesn't mean it's going to happen today, right? It can happen in 10 months from now, it can happen in 1 year, maybe even in a little bit longer than a year. But it looks like that something bad is coming for the US economy, I would say the global economy, and that bad probably also, that those bad effects probably also will spread on Bitcoin and crypto, especially crypto, especially. Maybe the least effect on Bitcoin in terms of crypto, because crypto is the most prone for this risk taking. If there's no money in the economy, if money is scarce, then why would people bet on altcoins, right? That is just basically not happening. So that is something to watch, guys. I think this is just an extra piece of evidence showing that the 16-year cycle is in play, which basically tells us that this year will be very bullish. Maybe the beginning of next year will be very bullish, but till 2026 we could see a massive bear market where most people, I would say 90% in the space, is not prepared for. Okay guys, if you want to follow that idea, if you are interested in that, and if you want to make sure you receive the right information on these cycles, when to take profits in this coming bull market, make sure to subscribe down below. Make sure to hit the bell icon. Also share this video with your friends, drop a like, leave a comment to wake up the algorithm. Very important, because we want retail to be aware of this, right? We know smart money is probably already aware of this, and yeah, banks and stuff also are already aware of this, but there's not really a lot of retail investors that are aware of this, but those are always the ones getting screwed in the end. So make sure to share this video, guys, very important, so we can wake up retail and they can make smarter investment decisions this time and prepare for that massive recession that is most likely going to come. Guys, I want to thank you all for watching. I want to wish every single one of you a beautiful day, and I hope to see every single one of you in the next video.